Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Air Canada. Specifically, a couple days ago here we had Q3 2023 results here. Doing a little bit different of a video. My house is being renovated right now, so everything's kind of torn up. So I'm going to be doing the video this way, but I think it might be a pretty concise way of doing it. Yeah, so the stock itself in the past little bit here, as you can see, is really been pulling back quite a bit. I mean, the market itself has been pulling back with higher interest rates, a lot of geopolitical uncertainty. But after the earnings, it went down a little bit, didn't respond, even though these earnings were quite phenomenal, in my opinion. One thing I wanted to quickly look at before we actually went through any of the financials is, something that I kind of generally look at with companies before I start looking more deep into their financials if I'm interested. And there's some of the valuation metrics of Air Canada here. The market cap of this company now is $6 billion. And this company has cash of $8.29 billion. They got significant amount of more cash than they do the actual total value of the company. Yeah, I know that they have over $14 billion in debt, but they're actually paying that down. So it's pretty crazy to see the $6 billion market cap. In my opinion, this company is just ridiculously undervalued. It's been ridiculously undervalued for quite some time. But now, yeah, now even more so. And this is coming from a company that's got over $21 billion of revenue that they're generating roughly on a yearly basis. And we'll see what that's like going forward. Again, price to sales here's at a 0.29, extremely low. So I just wanted to point that out before, just a couple of metrics here before we went on with these financials, because pretty crazy if you ask me here. So this was the recent quarter here, Q3 2023. This is just the brief overview. I went from Q4 2022, Q1, Q2, Q3, so we can see sequentially here. Passenger revenue, this was actually an all-time record, $5.8 billion. Cargo revenue was $250 million. It's dropped, it even dropped from last quarter here. This is something that they told us, though, in the last conference call. This is expected, but it didn't drop that much. Other revenue, $268 million, dropped a little bit as well. So their total revenue came to $6.3 billion. Still a huge amount of revenue compared to before. I believe the passenger revenue is up almost, I think, something like 20% year over year. And this is where we see the net income. Net income of $1.25 billion. Nice to see these numbers changing. We had a pretty good quarter last quarter. We only had 4 million before, 168 million before. And of course, before that, we were in the red quite a bit. EPS was $3.08, and they have cash of about $8.2 billion, like we talked about there before. Cash has dropped a little bit, but it stayed relatively consistent. So going a little deeper here into the financials, again, we talked about the passenger revenue of $5.8 billion. We can look at this on a year-over-year basis now. Pretty big jump, $4.8 billion versus $5.8 billion. Cargo's dropped a bit, $281 million versus $215 million. Other, again, has gone up a little bit year over year. So there's a total revenue, $6.3 billion versus $5.3 billion a year ago. Huge increase. In terms of their operating expenses, aircraft fuel was kind of interesting. That's why I put it here. It was $1.6 billion about a year ago, and it was $1.365 billion this quarter. So we expected this to be a little bit bigger, but they actually did some hedging. We'll talk about this later when I talk about the conference call. So this probably could have been worse, but specifically jet fuel prices have come down significantly. So that's why it didn't affect this as much. Of course, wages, salaries, and benefits are going to go up because they're ramping up. I believe there's something like 90% capacity this last quarter. So demand has really, really come up a lot. Nothing else too notable here. Their total operating expenses were $4.9 billion versus $4.6 billion. Of course, that's expected to go up when pardon my language there, when your revenue is going up so significantly. So that made an operating income, not a loss, operating income of $1.4 billion versus $644 million a year ago. Non-operating incomes and expenses here. Foreign exchange loss, they had $61 million. So this helped a little bit as well, because a year ago they had over $951 million. Interest income, they had, again, a little bit of gain there, $118 million, because interest rates obviously gone up versus $46 million a year ago. But of course, in tandem with that, interest expense will go up quite a bit as well. In this case, it actually went down slightly. You'd have to read the note on that one a little bit. But it was just like the jet fuel here, it disproportionate. So the total non-operating expense was a $98 million expense versus $1.1 billion a year ago. So that's huge. And then that gets us down to the net income of $1.25 billion. A year ago, we had a loss of $508 million. I guess you guys probably remember that. A loss of $1.42 a share. So huge improvement, massive improvement. Of course, nothing seems to be going right in the stock market right now. It kind of reminds me of Facebook earnings in a way. If you follow Facebook's most recently quarterly earnings, it was perfection. It was a perfect quarter, and the stock went down next day. So there's a lot of uncertainty lately. We'll talk a little about that with Air Canada here in a sec. In terms of their balance sheet, there wasn't too much here. Their total cash equivalents, again, about $8.2 billion. In terms of their liabilities, they have long-term debt and lease liabilities of over $13 billion. But this is something that's been going down, but I think this might be something that's weighing on the stock a little bit. You could really dive into their financials here, but what this chart here is it's their interest, and also down here I believe I have their it's a maturity analysis for their principal and for their interest. So the long-term debt obligations, they have the remainder of 2023, 2024, 25, 26, 27, and thereafter, right? So this is just the interest portion. They have $123 million left this year in terms of the long-term debt obligations. Air Canada aircraft, $20 million, and so forth, right? So we can see the total down here. You can see that going into 2024, going into 25, 2026, and thereafter, they're quite significant. They're going up, and maybe this is something that's worrying investors in terms of their principal payments. Same thing, we're looking at about 2025, 2026, and a lot of this debt, well, not a lot of it, some of it is floating. So I think they're exposed to some interest rate risk potentially, and that could be concerning investors. If you know more about that, leave a comment down below. It's a little ways out, but I thought it was just something interesting to bring up. In terms of their statement of cash flows here, nothing too interesting in terms of their financing. We were just talking about their debt, repayment of long-term debt and lease liabilities, a payment of $808 million. So you can really see versus $573 million a year ago, they're starting to really pay this off a lot more. And they were even saying in the conference call that they're focusing on this. They're focusing on reducing this liability. Issuance of shares, nice to see no issuance of shares, only $2 million on the year ago quarter. And so their net cash flows used in financing activities in this case were $809 million versus $534 million before. In terms of investing activities, excuse me, additions to property, equipment, and intangible assets was kind of the differentiating factor here. $273 million outflow versus $333 million. So they only used $71 million versus $56 million a year ago. So that kind of helped. So the decrease in cash is $466 million versus $300 million. So then this brought the cash and cash equivalents at the end of the period to $2.4 billion. And keep in mind, that's just the cash, not the marketable investments that you can see up here, right? Going on to the next slide here. This one here is the conference call. Just a couple last things to mention here. There wasn't a ton. Again, we mentioned that the passenger revenues were a record. And the demand itself is tracking above the 2019 levels. Again, like I've said before, they're always comparing this to the 2019 levels. So the demand is quite significant. there was a question about the softness in demand for cargo. Again, like I said, they mentioned this last quarter, so they did note this. But they said there's significant demand going forward, and the yield is also going to be going up from this point on as well. So that's some good news as well, because like I've mentioned before, I think this is a very interesting part of their business that could grow quite a bit. Another very interesting part here was the fuel hedging. They said, before that they weren't doing this, but it seems to have helped them. Maybe they're getting a little bit worried. So this quarter, $68 million fuel hedging gain. Excuse me, sorry. $68 million. So that was a gain that they had from hedging that offset some of these fuel price increases, right? But they also said that the jet fuel prices have dropped. And now going forward, they're going to be doing this as well. So Q4 next quarter, they'll be hedging with 45% of the projected Q4 fuel requirements. So again, they're trying to get rid of some of that uncertainty. I'm all for that. I think most airlines do hedge with futures contracts. So that's something interesting, good to see. And it kind of seemed to even out the income statement there a bit in terms of their expenses. The next one here, since the second half of 2022, when things began to kind of normalize here, they've paid down over $1.87 billion in debt repayments. So that's huge right there. I think that's something, again, like that is worrying the market a little bit, but they're focused on this. And when you see these other metrics that we're talking about at the beginning of the video here, when they can start paying that debt down, this company is undervalued in my opinion. In terms of demand itself, the booking curve, they're saying it's in line with expectations, because there's some questions about interest rates going up, discretionary income. Are people going to be spending as much money? They said they haven't seen that yet, but they have enough different avenues within their business to capitalize on many different price points, things like that, right? And the last two things that I think are kind of what are weighing on the stock a bit here is, so the contract with the pilots is expired some time ago. They're still negotiating, so that's kind of a big uncertainty. And if you haven't been aware, there's some possible regulation in Canada in respect to passenger rights, pilot hours. So the passenger rights being, if a flight's canceled, what are people entitled to? What's the maximum fine? So this is something. One of the analysts asked if it could be in the hundreds of millions. They didn't really want to say, right? But it could have a significant impact on their earnings. So I think that with the rising interest rates, the amount of debt that they have, something that's very hindering the stock quite a bit. But overall, much better quarter than I even anticipate. And again, it's one day the stock is going to go. But when is that day coming right now with everything going on? I'm not too sure. But I'd love to know what you guys think of this. Where you think the stock's going? What do you think about their debt? Leave a comment down below. Don't forget to subscribe, guys, and I'll see you in the next one.